Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys. Today we'll take a look again at the euro currency. Although many traders right now come to conclusion that commodity currencies right now are a better choice for trading since they stand at the eve of significant setups that we have discussed on the previous week. This is Australian dollar, New Zealand dollar, Canadian also already stands in progress with this setup, and the background and the context for trading that ready to create on the commodity currencies are really clear, and all of them stand on the high time frame charts, and that's why they promise us the long-term trading and the definite direction for the trading for the considerable period of time. But still, since we mostly deal with the euro currency, and that is historically has become our major currency to watch for, major currency for discussion. That's why today we will talk on the euro currency, because situation here is sophisticated and it's changed day by day. So that's why probably this analysis will be more useful for those who trade on the euro currency. Situation here is a bit tricky, and you will understand a bit later what we are talking about. So guys, we will not repeat here all the conclusions that we come to in our weekly research. So if you would like to know the details, you could read this post. Weekly research already has been posted in the forum. So the major conclusion that we have made, that setup on the euro currency right now is bullish, and market really has the chances to take out of these tops in the medium-term perspective. There are different patterns that point on this possible action, and one of them is the bullish stop grabber on the weekly chart. So in fact, guys, this action on the weekly chart is the bullish grabber. Here, guys, on the daily time frame chart, we would like to spend some time on a very important moment that has appeared here recently. Particularly, it stands in relation with this ABCD pattern, because this ABCD pattern is very significant for understanding an overall situation on the euro currency. So if you will read our weekly analysis, you understand what I'm talking about. Take a look that, in fact, when I have seen this wash and rinse on the daily chart, it was in the beginning of the last week. So recall what we have said about this. This is wash and rinse of these lows. And we said that if market will taken out of these lows, then probably it will raise the chance for this upside butterfly. That's really has happened. But when I have seen this wash and rinse, I have thought, well, why this wash and rinse is so shy? Why it's so small? So if this really wash and rinse of these lows, it should be significant. Market should grab the stops here, and maybe even continue move lower after that. But market has shown very shy wash and rinse, and on that moment, that was some riddle for me, because I did not quite understand why this has happened. But later, when I have turned to analysis of this ABCD pattern, I have understand why this happened in such a manner. At the first glance, it sounds boring, so not really important, but in fact, this understanding of this issue, this a bit advanced analysis, and that could make the trader's day sometime. If now let's return back to the starting point of this ABCD pattern. Why we use this point at the starting point? Because if we will take a look, if we will take this point at the starting one, this major top, this pattern still stand as uncompleted, because market has not quite reached 100% extension. And that could lead us to absolutely opposite conclusions. Because one issue is when the market has completed ABCD and you're searching the chances for trading its long retracement out of this completion point, and then absolutely quite another tune if market hasn't quite completed ABCD. In this case, you look at the suspicious at any bounce up and you expect that market soon should return it back down and hit the target. So you understand the absolutely drastic difference between these two approaches. And now imagine that depending on what particular point you will take at the starting point of the ABCD, you will get absolutely different conclusions on what to expect on the market. And we have chosen not this top, but that point. Why? The answer stands on the 4-hour time frame chart. So if you'll take a look at this chart, you will see here is the moment of this point. Right. Just a minute. Here is the moment right here. So, because that top, its absolute top, was the Friday session. But on the Monday, and that was the Monday session. So that was the weekend between them. And market has opened with a small gap down. So if we'll take a look at the close price, it stands at 1450, and open price, it stands at 1447. So there was the minor gap down. But particularly this gap creates the situation where the real ABCD pattern has started on Monday. And this real action down was started on Monday because Friday has closed on the upside action. Then was gap down and action has started right on Monday. And that's why the starting point of the ABCD on the daily chart particular stands on Monday. And that consequently, this leads to the moment of this wash and rinse. And take a look that wash and rinse was small because market has shown this wash and rinse just to complete the ABCD pattern. And we see right now that this pattern has been completed. That in turn will lead us to the different conclusions that in fact the upside potential has not erased totally, and market right now is creating the patterns that could lead to the further upward action. You do not ask me about the fundamental background. I know all this stuff about the difference in the monetary policy of the European Union and the United States. We know the problems in the European Union with Greece, the debt problems. We know that the United States is ready to hike the rate, and the European Union stands in the quantitative easing and so on. So all of these moments we know, but on the last week, guys, when we have spoken about the possible reaching on the Canadian is 131, nobody knows why this should happen, and everybody look at this with the suspicious and doubts that this really has happened. But surprisingly, the Canadian Central Bank has cut the rate, and this has become the reality. Maybe on the common week we also will get something of that sort, something of that section. But the answer also could be simple. So if the patterns will fail, that will be also the answer, and the answer will be that market will not show any upward action. That's also, as you can see in the result. But still, as markets currently has the bullish patterns, we just can't ignore them, and we should analyze them and should use them in trading. While once the pattern will fail, well, this will be absolutely quite another story. But until this will happen, we will deal with them. So that's the background of the current analysis. So we have the weekly stop grabber here, and that's the pattern. This pattern is very important because it points on this top as the target, and we know definitely where the failure point, the point where our setup will fail. That is the lows of the grabber. So if market will return back down, take out these lows, the bullish setup will fail. Second conclusion that we could make on the weekly analysis is that all that we need for trading is just this most recent swing up, nothing more. Now let's take particularly to the trade planning process. So on the hourly chart, we have the swing of the grabber that's from this low to this bottom. This is the fib levels that we have on the possible retracement down. So we need to find the suitable level where we could think about taking the long position. By our thought, the very good level is this one, because it includes the confluence support on our charts, 109.25, 109.37 is confluence. Also, this guys will be the weekly pivot point on the common wick. And finally, this will be the 618 minor extension of this A, B, C top pattern, D action. So that will be also an agreement. Now weekly trend is bullish, daily trend is bullish. So we have the bullish context, we have the bullish pattern. So the first level that we will be watching for is this one for a possible taking the long position. Stop, it's better to place below this level. Theoretically, guys, if it will be not the euro currency but some other currency or some other assets, I probably could recommend to place stop slightly below the confluence. Because if confluence support in agreement and weekly pivot point will not hold the market from the downward action, hardly just the fib support will do this. Besides, guys, this is the lower border of this consolidation on the daily chart. This one stands 108.33 approximately. It stands inside of this confluence support. That's why if market will break through the confluence, it will break through the weekly pivot point, it will return right back below the consolidation on the daily chart, so that will look a bit bearish. But here on the euro currency, very common to place stop here, because we know the habit of the euro currency that likes 50% retracements. That stands approximately at 109 area. And this will be also in agreement with this A, B, C equal CD pattern. So that's why we can't exclude that market could show some small piercing of this confluence to complete the CBCD and then return it back up. That's why it's better to place stop here. If you trade on the weekly chart, you could place stop below the low of the grabber, but this will be extended stop. So, but if you trade on the weekly, that probably you could keep it. Well, that's our current view on the euro currency. So here we just final moment is that we do not want to see such sort of the action here. We do not see the miserable plunge for this confluence. We need to see some gradual action down to this area. Only in these conditions we will be searching for the taking the long position. If it will be just long candle down, of course we will not take any long position here. So let's see what will happen. This is really very thrilling moment right now on the euro currency. It's a very interesting situation. And let's see whether our setup will work and whether bullish weekly grabbers will survive or not.